2026 approaches. The market still underestimates the evolution of AI and computing. Several bearish headlines at the end of 2025 and the mismatch between AI investment and actual returns left many investors questioning NVIDIA's growth prospects. This skepticism is common, but it also explains why most investors overlook the core trends shaping 2026. If you focus only on a single quarter's capital expenditure, or short-term orders, you cannot perceive the deep structural changes unfolding, and you lack the conviction to seize the coming growth opportunities. NVIDIA has completed a profound strategic upgrade. It is no longer just a chip company, but a long-term leader across chips, computing, and infrastructure. Today, we are not discussing short-term market fluctuations. Instead, we focus on the structural trends driving NVIDIA's next phase of growth, the forces that determine whether it will maintain its lead and capture future market opportunities. Why must major companies upgrade their machines in 2026? The answer is simple. Power efficiency. AI expansion is no longer limited by orders, but by the real-world power grid. The new Rubin architecture, using HBM4, boosts single-chip performance to 3.3 times that of Blackwell, while consuming almost the same energy. This means if you don't upgrade, your inference costs are 3 times higher than your competitors. In the AI arms race, this is not a simple upgrade, but a survival contest. Rubin is triggering one of the largest infrastructure replacement waves in human history. When the market wavers, discussions often focus on proprietary AI chips, like Google's TPU. But the issue has never been design capability, it's supply chain control. Look at Apple's success with mobile chips. The key was not the A-series chip itself, but the long-term, large-scale control over advanced fabrication and packaging capacity. AI chips follow the same logic. All top-tier AI chips, GPU or ASIC, must pass through TSMC's CoWoS advanced packaging. This is the current global computing bottleneck, the only physical choke point. In 2026, NVIDIA, leveraging scale, cash flow, and long-term agreements, controls over 65% of CoWoS capacity. Less than 10% is left for other companies' proprietary chips. This means the TPU problem is not performance, but more like Apple's internal chips. Optimized for internal systems, but not scalable as a general-purpose infrastructure. In a world of growing computing demand, true advantage comes not from who designs the chip, but who can reliably deliver it. This year, one of the most significant strategic moves is NVIDIA's full integration across systems, inference, and software. This kind of integration has global importance. By working closely with the EDA ecosystem, such as Synopsys, NVIDIA is optimizing the entire pipeline, from chip design to system-level deployment, significantly shortening product iteration cycles and lowering long-term R&D costs. At the same time, low-latency inference architectures, represented by Grok, are becoming an important reference and a complementary force within NVIDIA's inference ecosystem. As a result, NVIDIA is no longer just a hardware provider. Across training, inference, and the software toolchain, it is steadily building a more complete AGI runtime platform. Today, NVIDIA does more than sell computing power. It defines AGI operational costs. While other models are still loading, NVIDIA's solution has already delivered inference output. This full-stack speed and cost advantage places NVIDIA ahead of all major competitors in deployment efficiency. Now, consider Musk. xAI's CoWoS cluster is one of the largest AI training projects globally in 2026. Its disclosed target is nearly 1 million NVIDIA GPUs for training Grok 4 and future larger models. Remarkably, at this scale, Musk did not opt for custom chips. He continues to rely on NVIDIA's validated platform. This shows even the most aggressive players prioritize proven computing infrastructure when chasing extreme training efficiency and reliable delivery. Meanwhile, NVIDIA's strategy is evolving, from mere hardware delivery to deeper ecosystem integration. Through collaboration with Grok's inference architecture and continuous expansion of the CUDA and NM software stack, NVIDIA is reducing the complexity from model training to deployment. This does not mean other paths are impossible. But as AI applications scale rapidly in 2026, NVIDIA's solutions hold clear advantages in maturity and deployment efficiency, When model size, response speed, and stability become commercial barriers, the market tends to favor platforms with complete tool chains and ecosystem support. The biggest black swan upside in 2026 is China's full market return. With breakthroughs in compliance technology, NVIDIA's custom chips triple in performance. Tech giants like ByteDance, Tencent, and Alibaba, with 2 years of pent-up computing demand, will release it all in 2026. This adds roughly $40 billion in revenue, not just as sales, but as a dramatic EPS recovery. Once sanctions ease, NVIDIA's valuation will see substantial upside. NVIDIA's current advantage was not built overnight. Early in its journey, Jensen Huang led his team to carve out a path in the GPU market. He proactively built overseas partnerships, secured supply chain nodes, and even after becoming the largest market cap company, he personally traveled to China to secure key orders. This unwavering execution laid the foundation for long-term growth. Jensen Huang's impact on NVIDIA is comparable to Steve Jobs at Apple or Elon Musk at Tesla. His business acumen, supply chain relationships in Asia, and relentless pursuit of business needs often exceed investor expectations. Total revenue stands at $230 billion, which is why NVIDIA's forward PE in 2026 is only around 25 times. It is cheaper than many growth-stagnant traditional consumer stocks. So, don't be swayed by temporary setbacks, and don't drop your chips before dawn. In 2026, NVIDIA's dominance is built on Musk's ambition, China's market potential, and TSMC's monopolistic control, a foundation that is virtually unbeatable.